Evolution of International Accounting Standards seminar organized by Dicalo Consulting. At YouTube. Dicalo Consulting email. consulting@dicalo.com. Dicalo Consulting Best Practice Financial Management and Reporting for the Public Sector IFRS and IPSAS Training. At Landmark International Hotel BANIYAS, Deira, Dubai, United Arab Emirates, from the 2nd to the 20th of September 2020, a key function of accounting standards is to create a common set of rules to be used by all companies so that outsiders can receive financial reports that are comparable among all the different companies they might want to analyze. Without this comparability, financial reports are virtually worthless. Both the FASB and the IASC, predecessor of IASB, were established in 1973. The FASB had the advantage of being an independent board with broad representation from the U.S. business community. The IASC was a consortium of national CPA organizations, and committee members served part-time while maintaining their connections with their firms and their clients. Continued, the early IASC standards were just a compilation of the diverse accounting practices from around the world with some expression of a preferred alternative but no coherent conceptual foundation. The original standards of the IASC were, and are, called International Accounting Standards, IAS. The body of standards issued by the IASC, IASB is now referred to as IFRS whether the label is IAS or IFRS. Continued all during the 1990s, the IASC worked to eliminate the large number of alternative accounting treatments allowable under IAS and also to improve the overall quality of the standards. The immediate goal of the IASC was to have its set of standards endorsed by the International Organization of Securities Commission (IOSCO), which includes the U.S. Securities and Exchange Commission. Continued, in 2001, the IASB was aggressive in promoting its standards as the International Accounting Standards Setter through a substantial organizational restructuring. In 2002, the IASB and the FASB entered into a joint agreement, called the Norwalk Agreement, in which they pledged to work together to develop a set of fully compatible accounting standards, and to continue to work together to make those standards stay compatible. Continued, in 2007, the SEC announced that it approved the use of IASB standards for the financial reports of non-U.S. companies with shares traded on U.S. stock exchanges, effective on March 4, 2008. In 2008, the SEC revealed a timeline for the rapid shift from US-GAAP to IFRS, with all U.S. publicly traded companies being required to use IASB standards by 2014. Brief history of the IASB and its standards. IFRS. In October 2008, this rosy timeline exploded in a blaze of controversy when the IASB caved into European banks urging for a favorable accounting standard change. This blatant politicization of the accounting standard setting process caused many in the U.S. business community to rethink the transfer of sovereignty over U.S. accounting standards to the IASB. Now the timeline is 2015 at the earliest. 1973 International Accounting Standards Committee IASC, founded by 10 national accountancy organizations. 1981 all members of IFAC became members of IASC. 1,999,100 plus countries. Structure reviewed. 2001 International Accounting Standards Board IASB began operations. 2005 Europe, Australia, 90 plus countries adopting IFRS structure. Trustees 19 appoint board, IFRIC and SAC, 6 North America, 6 Europe, 4 Asia Pacific. 3 other Standards Advisory Council SAC advises board national standard setters Australia NZ, Canada, France, Germany, Japan, UK, US. Board 14 approves IAS IFRS ed. SIC IFRIC. 7 Liaison MINTNL. Financial Reporting Interpretations Committee 12+1 publishes draft interpretations and prepares draft of final interpretations. 19 trustees, 6 from North America, 6 from Europe, 4 from Asia Pacific, 3 from any area. Appoint IASB members. SAC and IFRIC monitor IASB's effectiveness, raise funds, approve budget, responsible for constitution. About 50 members from throughout the world. Meets 3 times each year, provides advice to IASB on priorities, informs IASB of implications of proposed standards, has the sole responsibility for setting standards. Approves principles-based standards, does